Hello everyone, and today I'm going to introduce you to a very unique but common system. So I think every one of you probably do some version of this into your trading lifestyle. And I'm just going to right now map it out for you on a step-by-step basis on how this would actually apply in selecting the right stock at the right time to trade at. So the system can be called by different names. There is no hard and fast rule for a system name. In simple terms, it's called the ABC system. Now, what does A stand for? So A stands for a stock or a set of stocks that you plan on trading this week. So this is something that you have your eyes on and you would like to make an active effort to trade this week. Now, how would you do this? Now, if you scan your markets, or you, depending on the style of trader you are, if you are a day trader, you would do an analysis of the charts through a market scanner, and this could be before market, pre-market hours. If you're a weekly trader, you would do a scan on the end of the week, on the weekend, and that would be the set of stocks that you would try to keep an eye on, that you would like to trade for that week or that day, whatever your time frame is. So this week / day would be an appropriate term. Some of you may do it for this hour, and that's how active you trade, and that's your time frame that you're comfortable with. So A is to plan to trade this week, and the important point is that the strategy or the way you would actually identify those would be up to your trading style or your strategy that you use. So say, for example, and I'll explain this to you in more detail as we look into some of these styles as well. One of the examples would be which stock did have a very high volume gain for the day. So or which stock was the highest percentage gainer for the day, and that could be a pre-market scanner, or it could be any of your scanning tools that you use to tell you that's a stock. So for example, Amazon was a stock that came up for one that you would like to trade for this day. That could be your stock. And there could be Tesla, whatever is your categories could form your A strategy or A bucket. Now, the second one is the B bucket. The B bucket stands for you plan to trade those next week or / tomorrow. And what this is basically these are the set of stocks that you would like to keep an eye out for in the coming days or the next week. And why is this important so say, for example, you're looking at your moving averages. Now, I just don't want to dirty that plane, but I'm just going to go down and say you're looking at your moving averages, and a stock is trading. Let me get this back. So a stock is trading like this and like this and like this, and this is your moving average line. And say this is where you would like to buy a stock at. Now, if the stock is not your yet, so the stock is your, and this is your buying area, and this is on the weekly time frame. So it'll take you about a week before it actually gets here, and then again goes up. And this is your buy level. So this is the area that you're looking to actually buy at, but it's going to take you a week. So by just ignoring it, and if you've actually got so many stocks, it's going to be hard to really think about how you're going to do it. So what I normally do is I create watch list, and you could have like a watch list, and then you can have a B watch list, and I'm going to talk about C very soon so that you get some context into what this is. C would be the stocks that you don't want to trade. And you would ask me, is that, can I just include everything into this? No, that's not the idea, because you'll be probably trading 5, 10, 15 stocks. So why include the stocks that you don't want to trade? Now, this only applies to your favorites. And the reason for this is that you could have a lot of stocks that are on your favorite list that you would be inclined to just like get into, but you shouldn't be, because this week is not the right week, or this today, tomorrow is not the right day to get into it. You wouldn't want to buy a stock. So this would be a C stock in a category, a C criteria. You would not want to buy it here. You would want it to come back to your average mean. The other one would be, say if this is the MACD and you're looking at, or say this is the RSI indicator, and you trade up that. If this is the mean and this is the top, this is like the 70 and this is like the 30, and if it's like in the overbought territory, it's fine. Like, you could actually like sell it. But if it's somewhere in the middle, you don't want to touch it. So this would be a category C over here as well. So I'm a little messy, but I hope you get the idea. So there's 3 categories. So the plan to trade this weekly or daily. So, for example, now let's look into this as actual real life examples. So you would have Amazon, you would have your Tesla, and this is just stocks that you plan on trading, and this would be your A watch list. So watch list. Okay, so you have Amazon, you have Tesla, you have and I'm just kind of making up names, but you would actually Nvidia, and then you would have the B watch list, which is actually not coming to the level that you would like to buy it at. And that's your B watch list, and you'll kind of prepare, and it'll kind of be a cycle where you would prepare A, and you would also keep an eye out on B, and when you're looking at B, you will then also, that'll be your A, and it'll kind of like cycle between the two. So this will kind of like, and like kind of like, keep rotating, and you'll have a new B and a new A every week, and that's what you'll prepare. So B would be like, I'm just gonna pick a stock like Pfizer, Moderna, and whatever the stock is based on your criteria, you would then pick it for the week and the next week. And what that does for you is that it'll actually have a ready list of stocks available to get into the market. So you're not like, you just open up and this pre-market moves jittering around, and you're not just caught off guard into impulse buying. So that'll definitely prevent you from impulse buying into stocks and just getting into it because of the momentum you see there, but you've already done your homework. And this is part of the plan cycle. So if you know what's a trading plan, I think I talked about it in another video, but I just want to mention that a trading plan consists of a few important principles. The first one is plan. The second is to implement. The third is to measure. Fourth is to assess. And the fifth one is to improve. So this is all part of a trading plan, but these are all steps into a sequence into how you should be trading according to the plan. So I hope this was helpful. Different strategies, different tips. So to recap, A is to plan your trade for this week and day. The B, it would be to plan to trade the next week or tomorrow, whatever is your time frame, for the next hour. I wouldn't do a next hour, but next week would be very sound. And if you're doing next week, this should be done on the weekends. If you're doing next day, this should be done after hours, never during trading hours, because then it'll kind of distract you and it'll make you to step in when you're not supposed to. And the favorites would be like something that you normally would buy, but you want to keep it outside your radar because it doesn't fit your category. And some may just ignore the C. You don't really need a C. So this is kind of optional, but I would say A and B is you really need to have this. This is a must. Okay. So I hope this was helpful, a different perspective on how and why we should have these watch lists as part of a daily trading plan. Make sure that you also, as part of this plan, decide on what is your buy value and what's your sell value as well. Don't just leave that. And also, what's your stop loss? So all these three things should be factored into your decision making as you kind of like figure out what is why am I selecting Amazon, what prices should I buy it at, what should I sell it at, and that'll give you a better risk reward ratio because you're coming in prepared and not just impulse buying or selling into the stocks. So with that, I will see you in another video. Thank you so much, and I hope you have a wonderful day.